Over the past 3 months, I've been going over what's happening with funded trading and how you can start making $10,000 to $15,000 a month trading these funded accounts. Now, you have to start small, but you can gradually grow, and I think anyone can scale these accounts. The biggest thing that I want to mention is that this is not a get-rich-quick scheme. You have to start small and slowly get to this point. But I'm going to show you where we're at and how you can start doing this right now. I had a lot of questions on my last video showing how I made that money and kind of how quick and was it a quote unquote scam. So in today's video, we're going to go over the overall scheduling and how you can set these goals for yourself and what to realistically expect. Then we're going to go into strategy, how exactly I attack this, because over the past month and a half, things have changed dramatically and you have to kind of pivot to understanding where the market is. And then I'll give you the final expectations and things that you should be doing to increase your likelihood of success along this path as well. Let's not waste any time. Let's get to it. So before we jump into the charts, I want to just cover a few things. And I wanted to show like some evidence or some proof of what's happened here. Now, in previous videos, I've gone over my winnings and withdrawal, and people are like, well, that's a scam. Anyone can do it, this or that, whatever, right? I don't know how else to say it. So I'm going to go over people's expectations and people's reviews of what's happened here. Now, number one, Discord, this is where people just are with me every day. And this is stocks and futures, right? So one guy here got funded my five funded accounts back today, 2 of 5, 3 more to go. And then another guy, these are all stocks. So again, I don't want to use that as an example. And then you have a guy over here too, Kid with a Straw, has been killing it. I have to scroll all the way up. But again, yeah, he made about $1,500 just on that specific day as well, getting that funded account as well. Now, I will go into who I use for my funded accounts, but that's besides the point for right now. The other part here is Twitter. This is a free source, right? I never want people to think they have to pay for content. Twitter is down below. I post my levels, stocks I like, things like that, right? So again, you know, there's stocks here, right there, stocks I'm posting as well, and then also right here with NQ ES levels. And again, all I'm doing is breaking down exactly what we're looking for and how we're looking for it. And I'm using everything that I'm teaching here on the channel when I'm making that content as well. So whenever we're going into the charts and you're trying to understand what's happening there, understand one thing though, you're not going to get it all in one day. You're just not, it's just not going to, come to you, in a dream and you're going to get it, right? This is levels, and I stopped trading literally at noon, I believe, on Friday. You're respecting the levels still. And so we'll go into that as well, but understand it's going to take time in the market to really start to understand this. So if you do want to take this seriously and make money, be prepared to lock in. I don't like to just show gains here on the channel, but I like to show other people's as well, just to prove the fact that what we do and how we attack the market really does work. Because I sometimes think other people can be the best way to demonstrate that success as well, not just believing my word for it. And there's probably people down in the comments that can vouch for this as well. But when we're looking at this, I want to make something very clear. Before I go into the strategy, this is probably the most important part, is understanding and wrapping in what your goals have to be, and then how you can also reach your longer term goals as well. I didn't go into this with the mentality of like, I'm going to make $10,000 to $15,000 in week 1 or the first month. The first month or first week was like, let's just make $500. Then let's scale it into $1,500. And it's step by step got to where we got to this point. And that's the really valuable point. I also want to say there is some downside of scaling too much on your accounts. Okay, so I'll make that clear as well. Let's go back to it. Before we go again into the charts and things like that, I want to talk about a few things of who I use for my funded trading. Now, number one, I do not have an affiliation with TopStep. I think TopStep, they're top 2 right now. Okay, and I'll go into exactly why. TopStep, it's going to take you 2 days minimum to pass your account. It says $50, but it's really going to be $200 because you pay for your account and then your activation fee. Understand that. So we'll make that really clear. TopStep is really clean, and they don't have the consistency rule when it comes to actually being funded, which is kind of awesome. But that's TopStep's prices. My funded futures, this is probably my top pick. I am affiliated with them, so just know that when you do sub with them, I get some kickback on that. But also understand, this is a flat price for a 50K account. It's $80, okay? That's very important to understand. You have all the different platforms you can use. But again, it's only $80, which is the coolest thing. And I recommend the starter account. That's what I use personally. Do whatever you want. These prices will be changing though, beginning of the year. To let you know, I think they're getting rid of the 150K account. So if you're interested, use it while you can. That's the one that I use personally, is the 150K account on my funded futures. And I use 50K accounts on TopStep. Let you know that right now. So make that really clear of what I use, how I do this. So again, these are the only accounts I'm really using right now. I'm not using my Tradeify that much. I don't like being spread too thin. And I'm going to go into that here as well. Now, the other part of this, I want to break down some simple math of goals and expectations, because again, I talked about your goal should be like, in the beginning, $500 a week, right? So let's say you go in, and I recommend starting with like 1 or 2 accounts first. Do whatever you want. You can copy trade those as well. But I want to break down quick numbers for you so you can understand this with me. So let's hypothetically say, I think the minimum we got to make on a 50K account on Top Step, you have 5 days of making, I think, $150. Let's just say 150, right? So let's say you make $150 a day. So let's say you have 5 accounts, the max accounts you can have on there. Okay, 5 times 5, okay, and then times 5. That's how much you would have to make to withdraw, okay? But it would be obviously divided by 5 per account. But this is how much you totally have in profits. So you can divide that by 2 and withdraw that money, right? And that's a 1 week process of making $18.75, which I've done here on the channel and I made very clear. Let's say you only want to do 2 accounts, okay? But I make this point so you can understand how realistic it is to make money doing this and how you can start scaling, right? So you do 2 accounts, 150 times 2, so 2 accounts, 150 a day times 5, again, 1,500, and obviously that's 750 in profits per account, right? That is what you're doing right there. So very important to understand, not to divide. I don't know why it's divided by 5, but anyways, it's 750. That's what the number is, okay? Make that very, very clear. And that's the progress of this, of you got to know where you're at, where you're starting, and where you're going. Now, eventually, what I think the best method to do is start small and slowly, as you get success, buy more accounts, start scaling up. But I do think there is a ceiling for that because you start to get overwhelmed. There are programs out there that you can copy trade all these things like Replicanto. I don't like them personally. I've had some horror stories with them. You can use whoever you want to do. I just mainly trade my accounts. That's how I attack this. So understand that. But again, if you're using the max MyFunded, max Top Step, again, this is, in my opinion, one of the best ways you can be making money. So you have 8 accounts, and let's say you get to the point to where you're trying to make $250 a day, which I think is very manageable, in my personal opinion. Okay, 250 times 5, that's $10,000 a week. And if you're withdrawing 50% of that, which you in the beginning, that's all you can really do. That's $5,000 you can withdraw a week, and then it keeps rolling over to you each week. Okay, so understand where you're at and how this can quickly start to snowball and compound. And this is how I've demonstrated this, right? Now, again, some days, I don't have to make $250. This is just a cumulative average for myself. Some days I might make 400, and then other trading days I'll go into, I just don't want to get aggressive, don't want to trade. But I think people go into this with the mentality of like, okay, well, I made 300 on the day. Let's go for 1,000. Let's just go for 1,000. Like what? Right? 1,000. Times 5, then times 5 accounts. Do make it 25 grand a week? No, like you're jumping ahead of yourself. Okay, so you have to understand that, and you also think about protecting yourself in the long run. So again, for me, it's about consistency, staying in the game, and staying with getting those withdrawals consistently. Okay, the next point I want to mention here too is times in the market that I have been focusing on specifically. And I would say right now that I think London and New York session has been the best time to trade. I think New York session is just obviously the best time to trade. You get the most consistent movement if you're scalping. But yeah, so really quickly, just demonstrating that time as well. Again, it's always, I'm in Central Time, so you can do that for yourself. But again, it's going to be right here basically from like 8 o'clock all the way until around 4, which is around right, give or take right here. And so just giving you an example of the action that you got in that trading session for this just random specific day. You popped up, you came down, you popped up. A lot of action to trade there, right? A lot of action. Now, going into the Asia session, right? Sideways consolidation, a lot of sideways. 7 o'clock the next day, what happens again? You've been getting more consistent movement. So again, 7 o'clock here. This is pre-market, but going into roughly right here, again, you get this great movement for a bulk of the day, a lot of upsides and some sideways consolidation. And then again, some downside, and then you break back up, good action next day. So again, knowing where the market is moving the best for yourself and where you're gonna get the best opportunity. And I think people go into this with the mentality of like, okay, let me make this money. If I can make money at night, then I can make money during the day, then I can make money all 24/7, right? That is not the mentality to think about this, especially with these funded accounts. You have to understand, the more you trade, the bigger the chance you're going to lose money, right? So if I have a massive day and I'm at this massive profit, 10x my profits by 10 a.m., right? 2 hours in the market open. The mentality is there of, okay, well, I could do a 20x day if I keep trading. That is not the mentality to have. It's make your money, get out, live to fight another day, consistency. And what's your goal? get done with that day and get to another withdrawal again and again and again, right? That's where you want to get. And then when you get to a live account, then things change a little bit. But I personally don't like getting to live accounts. The closer I get to the live account, I try to get all my money out of there, reset the accounts, and get started again. I'll explain that more in a live stream or something. But again, very important to understand that as well. But knowing the markets you want to trade. I see too many people talking about trading London, Asia, and they're confused by the market movement. It's very clear you get your best movement during market hours. Another great example here, fantastic example, is I think this is last Friday, right? Yeah. 7 a.m. you dump, and then guess what? You pump basically until, all the way next Monday. Like, just great action. But even here, you go back to just that trading market day here, right, to about there, give or take, and you can see market opens, you pop up, you dump, you pop back up. Volatility. That's what you want to be able to trade, back and forth. 20-point, 30-point moves, whatever it may be. So again, knowing those times, and stop getting to the point to where you have to trade nonstop. Now, I like to go over different ways that I attack the market and the strategy as well, because yes, I can go over the same thing a handful of times, but every single video you might get something differently out of it. And I think this week and this past 2 weeks in particular have been great times in the market. There's also going to be times where you just don't want to trade that much. And that's why the first part of the video is so important. You have to understand that, yeah, your goal for each day might be an average of $250, right? But you also have to understand that some days you might be able to take more advantage, and some days you need to just get your money and run for the hills as well. In the last video, someone said that what I was explaining was very confusing and maybe was too complicated. Now, let me make this very simple before we go into this, okay? What we want to really do, you can even throw supply and demand out the window if you're fresh, if you don't want to, content overload, right? You're learning too much. Focus on key levels. We'll go into patterns and then understanding the patterns based on volume, okay? So the first thing is key levels. It's the first thing you have to do. And if you're not marking out your levels, I think you're dumb. I think you really are. If you don't, all levels show you is where previous action took place. It's one of the most important things you can do. And there is a little bit of a cheat here too if you want. You can use the VRVP on TradingView. I use it sometimes. It's good if I want to identify levels based on volume, but again, you have to tinker with it. So understand that. I'm not going into that for today. Key levels once again. And I'm going to do this as simply as possible. Someone says, again, I'm going to make it really simple for you. All we're doing, previous highs, we're on the 4-hour chart here. Higher the time frame, the better. But again, I'm just marking these out so you can clearly see. Now, off the bat, right? Previous high here from around July, right there. Previous high here when we broke in November for the first time. Now, obviously, you can see you're already respecting this level here on the 4-hour time frame. You broke up, you retested, and then you proceed to skyrocket. That's just a past, for instance. And then look what happened here going into Thursday. You broke below, you retested 1, 2, 3, rejected back down. You even come back into this on Friday, and on the 4-hour, you reject there once again. Very important to understand why we're looking at these levels as well. Very, very important. And again, I'll just continue marking out these points, and so you can quickly see as we were stair-stepping back to the upside, why we're looking at these as well, and just so you can quickly have reference points if you start moving, and you can just quickly see the high. It just plays out over and over and over and over. The harder part is when you're pulling back through these, trying to find those as well. But what I will typically do is look for those stair step levels to where we were moving back the entire time. That's my biggest focal point. I don't love finding these previous lows as much. It's not my favorite because sometimes you'll go through them, especially with momentum, okay? But what you really are looking for here is when you get a level like this, right? Right here. So you get a swing high, you break down, eventually you break back above, mount. That's a big level. That's something that you want to be watching. This level up here, 21,967, big level, what you want to be watching. So now as we go back into something like the 5-minute, the 15-minute, whatever you're trading, right? A few more things here, and we're looking just at Friday's action just for the sake of the video so we can go over this. And this has been the trend lately, right? You get clear-cut movement for the first 2-3 hours of the day, and we kind of chop or go back and forth for the rest of the day. Now, when you're looking at this, what are the indicators we always talk about? Number 1, VWAP, most important indicator. Number 2, 90 EMA. Number 3 is going to be volume, okay? Now, what did I mention in the beginning of the video? What you really need is key levels, understanding the overall trend, and then using volume to find those patterns as well, okay? Now, what do we look for with patterns, or what are we looking for in general? Now, number 1, the top 2 patterns I'm always looking for: a bull and bear flag, ascending and descending triangle. That is it. Why? Because they are continuation patterns. I don't love reversal patterns. I'm not a huge fan. I never want to try to time a top or time a bottom. Why? Because I'm trading futures and I am scalping the market, right? I don't necessarily need to make 100-point move. If I make a 100-point move, awesome. It's a massive day and I'm probably done for the day immediately after that. But understand, like, you make your money, get out of the market. Too many people are like, I need a time to top, 200-point gainer. This is going to be awesome. I'm a winner. Dangerous game. Do whatever you want. But again, for the sake of scalping, that's what this is for. And so what you're looking for here, number one, the 90 EMA. It's one of the best indicators for understanding the trend. And someone got mad and said it's too short of a time frame. It is a short time frame to use the 90 EMA. I have a long video on the channel as we can go over it. But when you get over the 90 EMA, we're looking for a few things. Number one, you want to trade the 90 EMA in the direction if it's above or below the VWAP. So if the 90 EMA is above VWAP, then you want to try to ride the 90 EMA on the 5-minute to the upside. And you can see here on NASDAQ, you rode the 90 EMA from market open, basically 845, 830, all the way until you reached your high around 2185. Literally 600 points of upside, right? Just straight to the top. Now, if you would have got out when you closed below it, it'd have been around like 2175, maybe, right? But just food for thought. And you never close below that and you grind up. Now, the next thing you're looking for here, bull flags, like I said, are ascending triangles. Now, giving you a for instance of what these are, let me just draw them out for you. An ascending triangle looks like this, right? To where action, you're making higher lows and you're hitting a brick wall of a level. So let's say hypothetically, say you come up, you come down, you come up, you come down, come up, come down, and you eventually break, retest, and push out. That's what you're looking for. The ascending triangle. Descending triangle will be the same thing, just to the downside, like this. Obviously, all you're looking for, and it's continuation. So what do I mean by continuation? I'm looking for it to continue in that direction. Would I be looking for a bear flag or an ascending triangle while we're going up? No, that doesn't make any sense. Now we break below the 90 EMA. Now we're not below VWAP, so it's still a dangerous trade. And so that's why you kind of break above the 90 EMA and you go back and forth, and you're not as strong in that trend until the very end of the day. But again, that's what you'd be looking for, right? So when you get back below, then maybe you're trying to trade a bull or a bear flag. And all a bear flag is, really simply put, or bull flag, right? You're pushing up, right? And all you're doing is just trending in that direction, right? Whatever you're looking at. And that flag is moving like this. You get the push up and you consolidate sideways and then you break up here as well. Now, one thing that I'm always looking for on these flags or on these patterns is a surge or information based off of the volume. Now, in my opinion, using volume, I like lower time frames. I'm going to make that very, very, very clear. If you're interested in this indicator, I just talked to Lux Algo as well for our custom volume indicator. You can use it if you're interested. The link is down below. So again, it's like, I think $20 now. I don't even know. But they're the ones that made it for us. Okay. So what you're looking for is very simple, just like this, to where you're kind of trading it like this. I wouldn't even consider this necessarily a bull flag because you're just consolidating sideways. You can still see the pattern still trying to form out there, right? But what you see here is very clear. You see that consolidating right here, lower volume. So volume is going down. So you're seeing sellers try to step in, but it's with less volume. And then you see a breakout to the upside from that pattern, and it's met by increased buying volume, signifying the continuation of what you're trying to find there as well. And if you look here, like on the 1 minute, you can see it even happening here. Again, you'll see it over and over and over. Little flag happening there on a smaller time frame. Again, declining volume met by buyers and pushes you into highs once again. And this is what you'll see happen time and time again. And it's the same thing to the downside, right? It's the same exact thing. Now, the downside was a little bit trickier here because you're not moving with the overall trend if you're trying to trade that downside. And why are you not moving with that overall trend, especially on the time frame of the daily or whatever you're looking for, just trading on Friday? Well, it's really, 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 really simple. Okay, I want to make it very simple. If you're looking to trade, 9 out of 10 times, if you're trading in the direction of the VWAP, you will have more, in my opinion, a higher chance of success. Now, that doesn't mean buying the top, right? So if you're mounting the VWAP like you did here early in the morning on Friday, that's a very good sign. VWAP is where majority of the volume comes into the market or to the stock, equity, whatever you're trading. So holding above that, that is automatically putting in the trend. So I will have a bull bias above it. And if we're below it, I'm having a bear bias. Now, the other point here is when you're trending through it, like here, this is a great example. On Wednesday and the after hours, Asia's market's been so shit. This is why. Back and forth, back and forth, back and forth, all through the VWAP. And then, you open up here Thursday morning, you get below VWAP and you just hold down for the rest of the day. That's the action that you want to trade. Not going through. If you're consistently going back and forth through your VWAP, it's a bad trading session. It's a chop fest. You will probably lose money. Now, before I let you out of here, I'm going to go over a few tips and how to attack this with a funded account. If you're trading equities, you can go into this as well. But I think it's more important, the risk to reward, when you're trading a funded account. going to let you know that right now. Okay, so number one, if you reach your target and you still want to trade, and I think everyone's going to have this issue, you're probably going to do it, even though I say you shouldn't, but do whatever you want. Size down. What does that mean? If I'm entering every trade with, 2 minis or 2 micros, whatever it may be, right? Once you reach your target of what you want to make on your account, cut that in half immediately. So if I'm trading with 2, trade with 1. If I'm trading with 10 minis or 10 micros, trade with 5 micros. Cut it in half, because I'm telling you, I promise you, you might win a few of them, but the longer you stay in the market on the day, you will start to lose. If you started the day with 5 straight wins, just understand, like, you are batting perfect. You have no real room to improve. You're already trading the best you could have. Why push it? Why do more? You've already met your goals, etc. You probably outperformed them. So again, what I would be thinking, how I view the market, and how I would attack that. If you want to keep trading, at least cut them in half. Number 2, if you're trying to buck the system and trade back down into VWAP, which I know some of you will, right? I even liked the downside here once we started rejecting up here like at 21.8 on Friday, okay? What am I looking for? Again, size down. If you're going against the trend, size down. You might play out, but look how much longer it took to play out. And I have to explain this because it's so important. You got from point A to point B in a matter of 2 hours. Then you went from halfway back down to where you started, right? Which you got from B to C in 4 or 5 hours, right? Literally, like 5 hours, okay? Almost double the amount of time to get that downside movement. So just understand that it's going to be a tougher trade and it's going to be a longer trade, which isn't really in your favor. You would like to get those quick moves up or to the downside. That is where you make a bulk of your money. So again, I want to make that very clear. And you have to understand, if you're scalping, are you like day trading? Are you swing trading? Understand the difference. If you are scalping, you are wanting to get in and you are wanting to get out. Your trade should not be that long, right? Understand the difference of the two. And you can't really live in both of those worlds on the same account. It's a dangerous, dangerous game to play, especially in the futures market. That's my opinion. Do what you want with it. If you have questions, comment down below. Follow on Twitter. All my links are down there as well. Have a good one, traders.